Have you ever paused to consider what it would mean if the US dollar, the cornerstone of global finance, began to falter? Recent debates on trade policies and tariff escalations have sparked genuine concern among investors and policymakers alike, stirring a conversation that feels both urgent and deeply personal. Let's first clarify what it really means when we say the US dollar is the reserve currency. Simply put, it's the currency that central banks and governments around the world hold in large amounts as part of their foreign exchange reserves. This means that for international trade and finance, whether it's buying oil, settling global debts, or stabilizing their own currencies, the dollar is the go-to currency. Now, what if the world's wallet suddenly had a new favorite currency? For decades, the US dollar has been the undisputed heavyweight champion of global trade. But with recent tariff tussles and a shifting global power dynamic, whispers are turning into serious questions about whether the greenback's reign is starting to feel a little less secure. Let's dive into what this could actually mean for your pocket and the bigger economic picture. Since the Bretton Woods Agreement established the dollar as the cornerstone of global finance after World War II, it has enjoyed an exorbitant privilege, a status backed by the US economy's sheer scale, deep capital markets, and geopolitical clout. Even today, central banks worldwide hold the dollar for about 58 to 65% of their reserves, making it the backbone of global transactions and trade settlements. Despite gradual diversification in reserve holdings toward the euro, yen, and even the Chinese renminbi, the dollar's share remains robust, largely due to its liquidity and safety during turbulent times. Shifting our focus to recent developments, President Donald Trump's second term, where aggressive tariff measures have been deployed with an America First mantra. In a bid to rebalance trade and stimulate domestic manufacturing, Trump has imposed sweeping tariffs, from a 25% levy on Canadian and Mexican goods to additional charges on Chinese imports. These actions, designed to devalue the dollar and make U.S. exports more competitive, have produced mixed reactions. Persistent uncertainty has triggered a notable decline in its value, with some market participants even questioning whether these policies might erode its global standing. Tariff-induced inflation is another factor at play. With import costs rising and consumer prices beginning to tick upward, core inflation has already surpassed Fed targets in recent months. This environment has forced market strategists to weigh the trade-offs between a stronger dollar, which can dampen inflation by making imports cheaper, and the political desire to weaken it in order to boost exports. While some observers point to de-dollarization trends, countries like China, Russia, and members of the BRICS grouping exploring alternatives to the dollar, the evidence is far from conclusive. Recent IMF and BIS data show that despite modest shifts, the dollar's share in official reserves has only seen a gradual decline over decades, not an abrupt fall. Critics argue that while political rhetoric around de-dollarization is allowed, practical hurdles, such as market depth, liquidity, and the trust built over decades, continue to protect the dollar's reign. In fact, many economists contend that the alternative currencies simply aren't ready to replace the greenback on the global stage. Investor confidence in the dollar has been a roller coaster. Recent data from global markets indicate that the dollar has slipped to multi-month lows, driven partly by uncertainty over Trump's erratic tariff policies and fears of a slowing U.S. economy. Analysts at major institutions like Macquarie and Deutsche Bank have warned that if the U.S. dollar continues to weaken, it could undermine its safe haven appeal, a key component of its enduring dominance. Yet, despite these jitters, many strategists remain cautiously optimistic about its long-term status, noting that no viable alternative exists that matches the dollar's global acceptance and infrastructure. So, what does the future hold for the US dollar? In the short term, the Trump administration's aggressive trade policies are likely to keep markets on edge, as uncertainties around tariff implementations and potential retaliatory measures continue to fuel speculation. Some analysts have even pointed to early warning signs that, under sustained political and economic pressures, the dollar could lose significant value. However, while these signals are worth noting, the dollar's deep-rooted advantages, its unmatched liquidity, vast global network, and the strength of the U.S. economy mean that any decline would likely be gradual rather than a sudden collapse. Investors, policymakers, and businesses should prepare for continued volatility in the near term. while recognizing that the fundamental pillars supporting the dollar still remain robust. Drop your thoughts in the comments below and share your insights on whether the dollar will continue to dominate, or if we're nearing a significant shift in the global financial landscape.